Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.7997 mark, and here on TradingView the market is up by 3.48%. And in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the EBOOK structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Polygon Matic chart. Polygon Matic, from these low prices that we had been trading within, we saw a very nice impulsive movement taking us to an all-time high at around the $2.9 mark, in a movement that have been terming as a higher Elliot count 1 to the upside. And after seeing the all-time high, we have been seeing lower prices in this massive ABC corrective structure, which took us back to around the $0.32 mark, in a movement that I'm terming as a higher Elliott wave count 2. And after seeing the formation of a higher Elliott wave count 2, whatever we expect next is a bit of a bounce to the upside in the formation of a higher Elliott wave count 3 before we see that wave 4, and then continue pushing even higher in the formation of that wave 5 to the upside. And that is the long-term scenario that I'm expecting to play out here on the Polygon Matic chart. We might see that bounce to the upside in the formation of that wave 3, and because a wave 3 is an impulsive wave, we also expect to see fractal waves in formation within that wave 3 to the upside, having the wave 5 of that fractal wave completing the formation of that higher Elliott wave count 3, and also sketching out a minimum target area to the upside in the formation of that wave 3 using the trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $5.04 mark. Then expect a wave 4 and then continue pushing even higher in the formation of that wave 5 to the upside. And jumping to the 4-hour chart for further analysis, here on the 4-hour chart you can see I have this Elliott wave structure in blue, which is a fractal wave within the formation of that higher Elliott wave count 3 to the upside, where I believe once we see the formation of that wave 5, that will be completing the formation of that higher Elliott wave count 3 to the upside. And getting a little bit into the details of the formation of this Elliott wave structure, so that it can also give us the short-term scenarios that I'm expecting to play out here on the Polygon Matic chart. You can see we have the formation of that first wave to the upside, which I believe has come to a complete the moment we made a peak at around the $1.3 mark. And because the first wave to the upside is also an impulsive wave, we also expected to see fractal waves in formation within that first wave, which is the movement that I have represented over here in this Elliott wave structure right here in yellow, having the wave 5 of that fractal wave completing the formation of that higher Elliott wave count 1 to the upside. And whatever we expect next after seeing the formation of that first wave to the upside is a bit of a retracement to the lower side in the formation of a second wave, which is a corrective wave. And because of its corrective nature, I also expect to see fractal waves, that is an ABC corrective structure, in the formation of that second wave. And before I get to the short-term scenarios that I'm expecting to play out, basing my analysis on the ABC corrective structure, it's good I give you the short-term scenarios that can also play out, basing it on the key areas of support and resistances, and also on the key chart patterns that we have information on this chart, where you can see here on the 4-hour chart we have this channel that we had been trading within. With the moment we lost the 20-day MA, we saw a breakout out of the channel to the lower side, touched the key area of support at around the $0.78 mark, and right now we are seeing a bit of a bounce to the upside because that is a significant key area of support. And there are chances that now that we have support of the $0.78 mark, we might see that bounce to the upside, continue pushing higher, get back to around the $0.95 mark, which is a key area of resistance, maybe manage to break above it, and once we see a retest we can continue pushing even higher. And in case we get to that key area of resistance, get rejected, I'll be expecting a massive pullback over here, lose the key area of support at around the $0.78 mark, see a retest and continue pushing a little bit lower, and getting back to the ABC corrective structure that I'm expecting to play out in the formation of that higher Elliott wave count 2. There are two possible ways I can have that ABC corrective structure here on the Polygon Matic chart, and that is what is going to give me the short-term scenarios that I'm expecting to play out. And the very first way to have that ABC corrective structure is having this as a massive wave A to the lower side, then I'm expecting a bit of a bounce to the upside in the formation of that wave B, then continue pushing even low in the formation of that wave C to the lower side. That is the very first way to have it, to have that ABC corrective structure, and sketching a minimum target area to the upside in the formation of this wave B, using the Fibonacci's, connecting it from the high of that wave A to the low of the wave A. That gives me a minimum retracement area to the upside in the formation of that wave B between the fib level 0.618 and the fib level 0.382, which perfectly lies between the $0.97 mark and the $1.09 mark, and that is the minimum that I'm expecting that wave B to the upside to do before we see an impulsive movement to the lower side in the formation of that wave C to the lower side. And for us to still say that we're in the formation of that wave B, there are key areas on the Fibonacci's that we need to continue holding above, and using the Fibonacci's, connecting it from the low down there to the high at around the $0.94 mark. That target area that we need to continue holding above is the area between the fib level 0.382 and the fib level 0.618, which perfectly lies between the $0.88 mark and the $0.83 mark, which is a target area that we have lost here on the Fibonacci's and continued pushing even lower, making it to the area at around the $0.78 mark. And that gives me a possible scenario that maybe we made our high in the formation of this wave B at around the $0.94 mark, and that's why we are seeing this movement to the lower side, which as the chart continues to unfold might turn out to be impulsive, and the formation might be the formation of this wave C to the lower side to fully maximize the formation of that higher Elliott wave count 2 to the lower side. So that is the first possible way of having that ABC corrective structure, and also have in mind that we might have made our high at around the $0.94 mark. It is not a must that we fully maximize the target area that I have used, that I have sketched out using the Fibonacci's. There are chances that we might have made the high at around the $0.94 mark, and whatever we are seeing over here might be the start of this wave C to the lower side, and that can only get invalidated the moment we regain our impulsive nature and manage to break above the $0.95 mark and maybe make a new high over here. So that is the very first way to have that ABC corrective structure. The second way to have that ABC corrective structure is having this as my wave A, making its low at around the $0.76 mark. Then we saw that bounce making a peak at around the $1.17 mark in the formation of that wave B. Then in case we continue losing, in case we lose the key area of support at around the $0.78 mark and continue pushing lower, that might be the formation of that wave C, which should fully maximize the formation of that second wave, and that will be a straight sell off over here in the formation of that wave C to the lower side. So those are the two possible ways we can have that ABC corrective structure, and let's be patient and see how that plays out, and I'll keep you updated. Also taking a look at the indicators here on the RSI. On the RSI, we are trading at around the 41 mark, meaning we have massive room for us to support any movements to the upside. Also taking a look at the MACD, here on the MACD you have been able to print a bullish cross, and we are also seeing an increase in the buying momentum, meaning higher prices might be coming our way, given that we have the support at the area at around the $0.78 mark. So let's be patient and see how that plays out, and I'll keep you updated.